Manish Sonthalia, Director and Chief Investment Officer at MK Investment Managers. Manish, thanks so much for taking the time. Before I ask you about stocks that are listed currently, I want to ask you about your opinion on stocks that are heading to be listed. I was speaking to a fund manager yesterday, actually a CIO of a mutual fund, and I asked him, out of 10 IPOs, how many do you find interesting? And he said 2 or 3. And that really sums up for me the fact that not much is left on the table for the investor. So do you think that's the case? And do you have any specific views on the Lenskart IPO?
Yes, so the problem of the market is that too many IPOs getting bunched up together. That said, having said, I think platform IPOs are likely to be good businesses going into the future. And on top of that, if these platform businesses are intermediation businesses, then even better. But the whole problem is valuation. And, there is where the problem lies. So bulk of the companies which are coming out with IPOs are basically platform companies. And a few of them are basically intermediation businesses. But we need to keep a serious tab on, how the valuations would stack up. So there is where the reservation is. Otherwise, things are perfectly fine. But what seems very interesting are platform companies, tech-enabled companies, because they will have non-linearity in the business model. Valuations is something we need to have a handle.
Manish, good morning. So where is it that you are finding value? Because I know you are a growth investor, Manish. You like growth, right? Are you currently buying growth in the results declared or in the existing positions, or are you hunting for value currently, and where are either of these available?
I'm predominantly a growth investor, Neeraj, you would know that. And we always like growth better than value and contra and deep value and all those themes. And I think at this given point in time, finding growth valuation asymmetry is the key to have outperformance. And even within, old businesses, laid back businesses, there are serious valuation discrepancies vis-a-vis the growth. And there is where we are looking at. But having said that, in terms of businesses where the growth is likely to be pretty good going into the future are some of the areas that we have already alluded to: consumer, technology, CDMO, and discretionary consumption more facing towards affluence is likely to do much better. Plus some of these beautiful IPOs that are coming in, provided we get them at decent valuations. Case in point could be, let's say, a Pine Labs or a Grow. But these are fabulous businesses, no doubt about it. But what price is the mood question?
I'm just wondering, Manish, and I remember a conversation we had with you not too long back, a few months perhaps, where you talked about your expectations for the benchmark. And of course, that was predicated on your expectations on earnings. I wonder if that has changed, because we are seeing a few surprises. And while a lot of people had penciled in single-digit earnings growth in the second quarter as well, they are being surprised on the upside. Are you?
So I think earnings expectation for FY26 and FY27 have been revised upwards on the back of government initiatives on taxation, GST cuts, lowering of cost of capital in the form of benign interest rates or lower interest rates, very low inflation and benign inflation, plenty of liquidity, government doing its bit in terms of capex, so on and so forth. So from that point of view, I think previously we were working with 9-10% sort of a EPS growth on Nifty 50 for 26 and 27. Now that number goes up to 13%. That is the only change. Another change is that previously a lot of foreigners would talk about the fact that India is pretty expensive at current valuations. It's no longer the case because the premium vis-a-vis MSCI emerging market has come down significantly, what historical numbers would suggest. And on the other hand, the underperformance of Nifty 50 over the last 1 year would mean that there is some reversion to mean. So all in all, I think the domestic flows, etc., are pretty decent. So all in all, if you have a trajectory of revised earnings growth upwards, good liquidity, low interest rates, valuation reset happening because of that, and government doing its bit to propel consumption, which was lacking all these last 2-3 years, I think it's a setup that things look much better than what the situation was 6 months back.
Manish, one space where I believe you are constructive on, the numbers thus far haven't looked all that great. A capital market space. And in fact, the rule changes for AMCs, maybe even for brokers, put a further spanner in the wheels, right? Are you still bullish there or using the dips to buy?
No, it's a case of a perfect buy from a medium-term perspective. Yesterday, we saw Nippon AMC numbers, pretty decent set of numbers. We must understand that these businesses are annuity businesses. And from the annuity business point of view, you have a market AUM-related growth coming through. Of course, you will find a TER that will come down because the volumes are only going to expand. But at the end of the day, you value absolute profits. And these are very high operating leverage businesses. ROEs in excess of 35-40%, dividend payouts in excess of 70-80-90%. And the runway for growth for many of these businesses are just too big because the financialization of savings is just playing out. I think this is a theme to buy on every day. Whether it is the RTAs, whether it is distributors, with the AMCs, we have some fantastic online brokers. I am extremely bullish even at these levels, and I think whatever corrections come through in the markets and this particular space, I'll be looking to buy.
Absolutely. Manish, as always, as I said at the start, we look forward to our chats with you, and it's been an absolute pleasure. Thanks so much.